may travel in the coming week. Let's kick off with our regular Sunday commentator, Mr. Christof Rühl, Senior Research Scholar at the Center on Global Energy Policy at Columbia University. Christof, good morning, and I hope you had a good week in which we saw oil prices have probably their biggest fall for many months. Clearly, there was a wobble in the market confidence last week. You're on mute, Christof. On mute.
Always the same after so many Sundays. Good morning. So, and yes, you're right. I think actually this is a case where we could say you heard it here first, right? Last Sunday we spent about what might be talking what might be in store, and a big theme was volatility, and here we go. And we had a roller coaster not only with oil markets but also jitters in the stock market. And it seems to me as if there's now a whole variety of developments coming to a head and pretty fast. So one is, well, as we discussed before, the monetary policy dilemma, the Fed being pushed by the markets and not giving in. So these two slow tankers on collision course. Also last week, interestingly, the ECB did blink. So they announced that they might be willing to buy even more government paper from the Eurozone in order to avoid this rise in interest rate implied by a sell-off of government paper in Europe and in the US. But you know, it's a dilemma, because if they do, market expectations of future inflation will do what? They will just go up higher, and then what? Then they have to buy even more, and inflation gets even higher. At some point, the bill has to be paid, the buck has to stop, interest rates will rise, and that will create uncertainty. And very similar for OPEC, right? They have also a dilemma now. The IEA is right. There's ample of oil in storage and below ground. There's no super cycle in sight. This is just gobbledygook. I never understood what the difference is between a cycle and a super cycle anyway, but everything since 2000 is called super cycle. It's not there. And OPEC has the same dilemma. If they now increase supplies into this kind of uncertain environment, prices may take another nosedive. If they don't, then supplies are coming from the US, from Libya, from Iran. And if they really maintain cuts and prices up, sooner than we think, something will happen which hasn't happened yet. They will be accused of putting fire to the fuel of inflation and fueling inflation by high oil prices. So that's another no-win situation there. And then we see volatility around the edges. Now, since I think 2 days, Erdogan in Turkey is on his fourth central banker. They fired him and expect Turkish currency to collapse on Monday. The Chinese have replaced 2 people on their monetary policy committee, equivalent of their central bank. Nobody knows exactly what this means, may mean nothing. But the fact that we look at these kind of things is interesting itself. So that's what I would say. There's a Fed dilemma, there's an OPEC dilemma, and there's increasing uncertainty and volatility around the edges.
Adi Imsirovic, Senior Research Fellow at the Oxford Institute for Energy Studies. We have the battle of the Senior Research Fellows and Scholars today. So welcome, Adi. Oil prices closed on Friday below $65 a barrel, and one would note that they haven't closed above 70, although traded above 70. Your thoughts on last week's developments, Adi?
Thank you, Sean. Hello, everyone. Well, you just mentioned some technical analyses. I'm not a big buyer of technical analyses in any case, but certainly what we saw last week, well, the super cycle was finished last week, right? Essentially, if you look at I think Christof mentioned some very important macro factors. I'll just focus a little bit on fundamentals of the market. It's not looking great. Even before that correction in the price, we saw all the telltales coming. First of all, dated Brent got weaker. Within 1 week, we actually had differentials for West African crude collapse by over $1 a barrel. That's a lot just for differentials. We see about 40, 50 unsold prompt West African cargoes looking for homes. So those barrels usually go to India and China, and we'll probably mention India and China many times later on in our conversation. But certainly Chinese teapot buyers are very, very price sensitive, and they're certainly not buying at $70 a barrel. And I think there's a lesson in there. Okay, that there's also turnarounds in Asia at the moment for the refineries, but certainly at these levels, I don't think we'll see much stock building in China again, in spite of the fact that we have some more storage coming up, plus some additional refining capacity. So essentially, it's a fundamental picture. Oil just had to come off, and it came off the way it should have come off. First, it came through dated Brent, then it came through differentials, and then the flat price reacted.
Christof, there's two headlines in our digest today from last week that I think are related, but I'd welcome your opinion on. Number two, which is the incredible public meeting between the Chinese and the Americans on Friday, in which they spent an hour insulting each other in front of the global TV cameras in a way I just cannot remember. I think it's unprecedented. And then the other headline is China increasingly buying more and more Iranian crude oil, nearly in defiance of the sanctions. In some ways, it seems to me that these two issues are related. I'm wondering what your own thoughts and the outlook for these two separate issues or correlated.
Yeah, they are related. And who would have thought that you could top Trump's public performances with other governments? But you're right. It was quite a show. It's bad. It's chilling because we knew before the election that if there was one item in the whole US political spectrum, polarized as it is, which could unify everyone, it would be that China should be taken seriously as a competitor, to put it mildly, or that China is the big enemy. And one should be more aggressive towards it, to put it more realistically. And that's what has shown up in the Alaska meeting, as Biden's team stakes out very fast, very efficient, and very much across the board its policy agenda and its various positions. That was part of it. So they put a plug into the earth, saying, so we take that very seriously. And that will be a message which will be certainly not lost on China. I mean, the whole meeting was, from the Chinese perspective, must feel like a setup, because there was an argument before where it should take place. And the US requested it be taking place on US soil. It's just a symbolic thing, but among diplomats, these things matter. And China gave in, and so that was already sort of coming up with a little peaceful intent, and then it escalated into that. Now, the interesting part is, what can China do? And they have lots of options. They can make life miserable on the trade front. They can make life miserable on the military front in the South China Sea. And one of the options they have is in energy markets, because, as we just discussed, this is a buyer's market. So the customer is king for a change. Now, China is a big customer, the biggest on the globe in terms of imports. The US is no longer a big customer, but it's a supplier. So it's on the sell side, and has accordingly more leverage with other producers like in the US, like in the Middle East, but less with countries like China. So what is the US going to do if China just imports more oil from China, from Iran and from Venezuela and from these kind of places?
It's like Adi said earlier, the teapots are pretty sensitive to $70 oil, but yep. What's the price of oil they can buy from Iran? I'm sure it's a lot less than that.
Usually it's a barter. Usually they just open the doors of the local supermarket and says, please take with you what you need. So usually it's another shot in the arm of their own economy. That's how it usually has worked traditionally with Iran under sanctions. But so, yes, expect that to continue, and that will make the road to normality for the Biden team a little bit more rocky, because the side effect, of course, is that Iran feels boosted and feels stronger and becomes more aggressive in turn in the Middle East, and less willing to engage in negotiations on resuming the nuclear talk with the US.
The development, Adi, we had Chris Bake on the show on Thursday, and he said a lot of different things, but one thing of note that stuck with me over the weekend was the point that he made about this development between Iran, or these sort of these illegal Iranian barrels, as they're regarded according to US sanctions. But ultimately, he described it as very destabilizing to the market, because no one really understands what is coming and where it is coming from, and that it could create a serious, creates massive dislocation. I'm just reading his quote, just so I do quote it accurately. Described it as a massive dislocation, potentially. Your thoughts, would you concur with Chris's views on that, as to its structural impact on the market? And has that played a role in last week's decline?
I don't think it played a role in the decline, but I totally agree with Christof that it is very destabilizing. The whole political issue of Iran and sanctions is now coming to the head. Obviously, Iran is trying to create as much trouble as possible to have the sanctions lifted, and we're seeing it obviously through the increased exports. I think Kepler recently said they were expecting in March Iranian export to reach 1 million barrels a day. That's significant. Interestingly enough, market just absorbed that pretty easily, those additional barrels. But also you see that through escalation on drone attacks in Saudi Arabia.
Another one over the weekend.
That's clearly all linked to the same destabilizing issue of Iran. And I think that when it comes to geopolitical issues, Iran is the one to watch. I think a lot of people are still worried about Libya, but that is another issue, and you have the headline there as well. But I think Iran is probably more important. And these drone attacks on Saudi Arabia are very, very concerning, even though so far there's been very little damage.
I mean, that's the interesting thing about them. They seem incredibly sophisticated from the point of view of literally dropping, missile X or drone Y right next to a pretty critical facility. But while they're actually not doing very much damage, but being there is kind of the message.
Absolutely, and I think that's going to be source of attention in the market. At the moment, as I said, fundamentals are such that there is plenty of oil, and I really don't see any major price spikes as a result of those attacks. But it only takes one missile to get through to the wrong place, and the whole market would be alight. So it's very concerning, Sean.
Christof, the other developments last week is ongoing, as we've talked about now, Europe's inability to really get on top of the COVID vaccine rollout, and yet facing what seems now to be further lockdowns and perhaps even the loss of the summer tourist season.
Yeah, I mean, if there are two grand schemes going in the weeks going forward, then one is the one of volatility we had already. The other one is the one of bifurcation or diversification, as different regions go their separate ways. And that is certainly the case when we look at the context to Corona and the epidemic. We have, as we discussed before, we have a very successful vaccination rollout in several countries, among them the US and the UK, and misery in that respect in Europe. And you can see the entire public discussion in those countries which are successful now about opening and should we double growth forecast or triple them. And in Europe, the whole discussion in, are we allowed to go to the barber shop, and is the third wave more dangerous than the second, and so on. It's a miserable feeling here. And it's such a grand failure of the European Union to perform better that I'm getting closer to wondering whether this will have some long-term effect on the cohesion of the European Union, something nobody had on the radar. We always discuss that when it comes to an economic crisis, but this one is like slow working poison, and I would expect that you sooner or later see countries going their own ways, and that this will have a lasting impact on the cohesion of the bloc, because it just brings home the message how inefficient they are. And of course,
is there something unique about this moment in that this was, the guy who sits in office 75 didn't send the form on time, or that it's a very specific negligence rather than a kind of a macro collective one?
It's incompetence of the largest. So what happened, for example, one of the stories in the German media, which I cannot verify, is that Germany was prepared to make its own contracts and had everything prepared. And then the German Chancellor Merkel called back the health minister and told him not to go ahead because this had to be done properly, i.e. through the European Union, of which she had the presidency at the time. That was supposed to crowning achievement before she would leave office. And so he didn't order it for Germany, nor did any other European Union member. The Brits were no longer in the European Union. They did it very successfully. But all the European Union members ended up in this mess. The European Union then appointed a commission, and that commission negotiated with drug producers, and they brought the price back down to saved about 2 billion or so, which is like half a day of lockdown. And as a result, nobody has the vaccine, on top of bureaucratic slowness in distributing them, on top of an increasing share of the population, especially in France, and so on, who just say we don't want to be vaccinated. So it creates a royal disaster, because the center doesn't work. The European Union is not an executively strong organ. We've seen that in in taxation, in policy, in everywhere. When it comes to doing things, they are weak. And number two, their members try to put things together and withdrew from fixing the problem for their own population. Let me put it this way: Germany has elections this year. Merkel had a very long, very successful run. If she were to run again, I think this by now would already break her chances. She would be voted out of office on back of that, because her job was to prevent harm from the German people. That's the oath which every head of state has to engage in when they assume office. And that comes across not only in this country, I'm sure, but everywhere as just the opposite.
The other development last week, Adi, India's crude oil processing throughput fell to its lowest in 4 months in February. It would seem to indicate that the rising prices are finally curtailing demand there, or how do you see the developments in India?
Yes, exactly, Sean. We did some projections for India, and actually India is a bit of a disappointment. But let's not forget that Indian market is very price sensitive, always been very price sensitive for oil, but also for LNG, for example. So one of the reasons that you're seeing all the oversupply of West African cargoes is that there hasn't been enough buying going there. And this also, India's had some issues with COVID as well, similar to Europe. So what it all does, and what Christof just been talking about, I think it's very important to remind us that this demand shock we had last year was the demand shock caused the price collapse, and it's really very much about demand still. We spent a lot of time talking about OPEC and what OPEC is likely to do, but it's the demand shock and what COVID is going to do. At the moment, we're just still hoping that this is, COVID obviously has some very clear seasonal patterns. So we're just hoping this third wave is just going to disappear within a few weeks, and then we'll go back to sort of the same trajectory of increased demand of whatever it is, 5.7 million barrels. And that's the main reason why we're still well above $60 a barrel. But this demand picture and this demand uncertainty is still going to be the key to the oil market and price developments in the oil market, and a big trouble for OPEC Plus. It's going to be very, very hard for them to come up with a new strategy, on top of the fact that, as Christof just mentioned early on, that yes, the higher the oil price, the harder it's going to be to keep that cohesion of OPEC Plus.
Can I add something?
Please, yes.
Yeah, I think two things. We really have to understand the fact that demand is so fickle and supply so strong that I would disagree with the previous statement about the Houthi attacks. The Houthis don't have the capacity to do what Russia did in Georgia, so to pinpoint a pipeline by shooting to the right and the left of it as a warning. They just fire their things and then they hit or may not hit. But remember, upgrade, even if they create some damage, this will not be a lasting uplift for oil prices. Might create a spike. It would take a real substantial hit to bring oil prices up. So that there's little.
That's certainly true. I would agree. At a time in which
and the second one, when we have now the OPEC meetings, every month, so they have created a situation where OPEC is being in the spotlight every month and has to say something, which makes management all of a sudden much more difficult than being able not to say anything, just continue the program.
I'm just seeing headlines go across the screen that Saudi Aramco profit slumps 44%. They just announced their results today. Not a surprise, obviously.
Same as last quarter. They will check whether they still pay the dividend. I think they will.
They are, yeah, they definitely are. Adi, despite the demand challenges we mentioned in Europe, etc., US seems to be moving very sharply ahead. Gasoline demand is back to March levels, normal March levels, according to the research agency in the US, Gas Buddy, which is pretty accurate usually on its outlook for or its review of consumption. So demand pretty solid in the US, and we also have rig counts continuing to grow every week.
Yes, very, very important. Let me just come back to just one little point that Christof mentioned early on about OPEC. Yes, the situation for OPEC, this demand situation is very hard, But at the same time, I think it's very, very clever to come up with the idea of meeting every month, because it gives them a lot of flexibility at the same time to react to market changes, especially for the Saudis as the leaders. In terms of the US, yes, again, seasonal patterns, we're seeing a downturn in number of cases and infections and so on. So obviously that's very, very positive for the market. We've had that big freeze. And last week, again, in the news was the fact that we had a build in stocks, but I wouldn't read too much into that, because that was primarily a result of some petchem coming in late because of the freeze and being delayed. Generally, overall demand is good, is improving a lot, especially gasoline demand. We're going to the sort of summer specs for gasoline, and that's also had a boost. But the vaccination has been progressing very well in the US, as Christof and yourself mentioned early on. Two countries, UK and US, have been doing extremely well. I think I'm quite impressed that the UK announced yesterday that almost half the adult population has been vaccinated already. I'm an odd one out, but hopefully I'll be there very soon. So demand, that's all very, very positive for demand. Having said that, we are in the middle of a big third wave in Europe, and that is, including India, has got some problems, and that is denting demand currently. But hopefully, long-term picture is very positive, and I think this market still, it will find it very, very hard to go below $60 a barrel, in spite of the fact that there is plenty of oil out there, there's plenty of excess capacity, and so on. We still have a lot of stock.
Is it a buying moment, Adi, for the ahead of the summer rise?
Well, I'm not. Yeah. I mean, if you look at balances, third quarter, fourth quarter are very likely, all things equal, very likely to be strong. We see increase in demand about 5.7 million barrels still this year. Supply only of about 1.7 million barrels. So obviously we are going to draw quite a lot, and that draw is going to come at the end of third quarter, fourth quarter as well. So I wouldn't be surprised to see oil blip well over $70 a barrel. But again, I wouldn't get too excited about it either. I think there's plenty of oil around, and our projections are again about where it is now, $63, $65 for this year.
Well, like a lot of things, Christof, so much of this market is built on the belief in OPEC discipline, and where you stand in OPEC discipline going forward, I suppose, is where you might place your bets. Christof, any further thoughts on the IEA report last week? We had the March monthly report, which was more or less not too much change, but then we had the midterm outlook towards 2026, a big call on OPEC production increasing over that period.
Yeah, I was two things. I was surprised that they basically took the super cycle theory chin on. It's not usually their style to comment on these kind of phrases or slogans market participants or marketeers come up with. But they did it on that account. I think they were right. It was a sober report. And then I think that they still predicted that we would overcome 2019 demand levels with relative ease and continue to grow. The longer term perspective, I think, may be a bit more dire than the IEA is expecting it, and as OPEC is expecting it currently. Also of interest, I only read the summary of it, but all of a sudden there's this other big issue. The investment gap has disappeared again, as predicted. So you heard it here first. These things come in cycles, but I think overall it was a sobering report, and I kind of liked the idea that they not only indirectly but sort of took a position towards one of the issues in the debate.
Well, somebody might have reminded them that they were a consumer organization. I mean, they have sort of lost their definition in recent years in terms of, are they OPEC or are they IEA? And in that regard, it seemed that they were, maybe India gave them a call and said, hey, can you talk this market down a little bit, please? Let's go to the survey question today, and that's really the outlook for the next week. In the run-up to the next OPEC meeting. We're back below 65 at the close on Friday. There was a recovery in the oil prices on Friday after the earlier week declines. But what's the view in the room in the next 10 days in the run up to the April 1st OPEC meeting? Are we going to rise back towards 70 with a bullish sentiment, or are we going to stick closer to 60 with a bearish sentiment? I suppose it all depends on where you think OPEC is going to go. And in that regard, we're going to go to the Adi and Christof and give us their thoughts for the coming week. Obviously, the OPEC meeting is over the horizon, a week plus away. Adi, your thoughts and expectations for it? Will it be a bullish sentiment going into the meeting, and anything else you see in the coming week?
Well, certainly it's the intent of OPEC to try and keep, especially Saudi Arabia, to try and keep the market guessing. And the reason for that is uncertainty is obviously good for prices. I would expect the Saudis to continue to press for higher prices and taper that sort of return of those 2.5 million barrels over time, rather than just come out suddenly with that. To do that, they'll have to keep the deal sweet for Russia and the others. But I do expect continued Saudi leadership in that respect to try and keep market as tight as possible. In terms of the week ahead, very, very interesting. I like to watch the front end of the market because it gives me an idea of the real fundamentals of the market. There's a lot of oil to be moved, and it'll be quite interesting to see whether that adjustment in the market is going to happen through the flat price, or whether the adjustment is going to happen through further deterioration in differentials. But I would expect at some stage to see some Chinese and Indian buying, because these are price-sensitive markets, and they will step up and probably clean up the oil that's out there. So that's basically what I'm going to watch for the next week, what's going to happen with these prompt barrels, whether they're moving or not.
Do you have any concern, Adi, or any thoughts around OPEC discipline, given how fundamental it is to the market? Do you remain confident that that foundation will stick?
I'm pretty confident that these price levels, that they will stick. They've realized, and I think Saudis have been absolutely right to be cautious, and we can see why, because COVID saga is not over. So I think that the discipline will stick. I was worried about the discipline when we went towards $70. And had we closed above $70, I think at those levels, certainly as we go to higher levels, it'd be harder and harder to keep that. But I think the memory of April last year is still very strong in many producers' minds. And Saudis certainly have that ability to repeat if needed. So I think they've made their point last year, and I think they'll make the discipline stick.
Let's go to the survey result before giving Christof last word today. As we run into April 1st meeting, do you expect prices to rise back towards 70? Seems to have got the nod over sticking closer to 60. But a relatively even split there. Christof, your thoughts for the week ahead?
Well, on the it's of course a famous date, April 1, but on the OPEC meeting, they're trapped because Russia, once we want to increase production a little bit, Saudi will not want to do it. And discipline is a relative term. We shouldn't forget that Russian and the plus part of OPEC has increased production by 700,000 barrels officially with the agreement. So I'm tempted to think that they will continue to release some steam through that valve. And otherwise, I agree with Adi that Saudi certainly will insist on maintaining discipline and maintaining supplies as tight as they can negotiate. Next week is going to be a very important week also in terms of this bigger topic of volatility. There's on Friday is US data on output and so, but what is crucial is Wednesday. Wednesday is like for the topic of this webinar is an amazing day because we have all at the same time all sorts of inflation data released from the UK, from the US, all sorts of PMI forecasts, expectations in Europe, in the US, in the UK. We have a Powell speech. We have the EIA stock data release, and we have the next round of auctions of treasury bills, which will determine whether this market-driven increase in interest rates continues or whether Powell has managed to calm markets down. So both on the energy front and on the macro front, a lot of important data coming out all of a sudden. And that could really be an interesting day for traders and for those in the market.
Thank you very much. My tuppence per worth is, the fallout from the China-US meeting on Friday, as the US reopens tomorrow and digests this, the geopolitics of all of that, and then how that translates into continued Chinese purchasing of Iranian crude, and that being an outlier to destabilize OPEC and compelling OPEC ultimately to roll over again and not to be able to increase supply, because ultimately the 2 million barrels or so that they were meant to increase on January has already been taken, 1 million by Iran and 1 million by Libya. So they don't have a lot of space, I suspect. And that would be my thoughts. Look at where the fallout from Alaska goes and get some indicators as to the geopolitics. But thank you, Christof. Thank you, Adi, for your insights today. As always, really appreciate it.
Can I do something unusual?
Yes, please.
Half a sentence. There's another link. China is also the biggest holder of the very US treasuries, which are the crucial variable for interest rates. So they could sell those too, not just buy oil from Iran.
Yes, this could get interesting on multiple levels. That is for sure. And these are probably the other places that one may need to look, that maybe not normally the center of focus in the run into an OPEC decision. But thanks, everybody. Have a great week, and we'll catch up with you in the coming days. All the best.
Thank you.
Thank you.